Heading for the rocks, the Japanese economy and yen could be doing just that as Japan's row with China over these disputed islands takes its toll on trade. I'm Jamie McGeever and this is today's Market Pulse. Well, Japan posts its worst September trade figures in 3 decades and the yen sell-off accelerates. Here with his view is Reuters FX analyst Neil Kimberley. Neil, pretty dreadful trade numbers from Japan and the dollar could be going up through a key level. We'll have a chart of it, the 100-week moving average.
Absolutely. I mean, we came on last week, Jamie, and I was talking about the dollar yen moving up then. I'm still the same opinion. We're knocking on 80, the figure now. We're at 79.80, I think, as we're coming on air. Clearly, there are bundles of sell orders around 80, the figure. Japanese exporters have no choice but to sell dollar yen on the first move up, because if they miss it and it goes back down, the bosses will haul them over the coals. But the bottom line is, as you point out at the top of the programme, the trade figures don't lie. And Japan's external position isn't looking so good. The conflict with the tensions with China continue. There are also some issues between Japan and South Korea. There are very few reasons for buying the yen at the moment. And the market, which has been split 50-50 between people who are beginning to believe in the higher dollar yen and those people who are going, we've seen this all before and it always ends in tears, is beginning to tip more towards the people who see the yen lower. And therefore, I still think we're going to edge our way through 80. I can see us moving to 82 in the next few months. It's difficult to go...
2 yen over a couple of months doesn't sound like a big move, does it?
Yeah, given the glacial pace of the dollar yen in recent months, I think the average dollar yen trader would take it. But it may well be that this thing gathers strength, because this is the trade that nobody can afford not to have. If you're a hedge fund guy and you miss dollar yen moving up appreciably, you are going to get into trouble. You're going to be in big trouble. You've got to have it on. And that's why I think we're seeing today, particularly some hedge funds coming in, you know what, I'm not sure about this, but I can't afford not to have it on.
That's dollar yen, and it's a similar chart pattern in euro yen, but the big number here is 105, right?
Absolutely. 104 last week. We went up there on Thursday. Japanese exporters did their normal trick, yours, knocked it all the way down again. But of course, as we come back up again in Tokyo this morning above 104, they've done what they needed to do. And as will be the case with dollar yen, they then sit back and say, well, I've sold some at 104. As they will sell at 80, the figure. But now the little bit of human greed starts to click in and you start thinking about better levels to sell. The offers aren't replenished and all of a sudden you're at 104.25 in London. Nobody appears to be sitting on top. The euro's pretty well big because of the Spanish result, and looking at 105 where the Japanese exporters come in.
Having said all that, Neil, the counter-argument to that would be it takes a brave man to bet against a currency with a structural current account surplus. And Japan, for all its travails, still has that.
It is, but it's got so many other problems. It's got this ageing population. I think it's scheduled to lose 30% of the population by 2060, which I appreciate is a long way off. The Japanese, the trade figures this morning, you have a government that's putting pressure on the Bank of Japan to ease policy further. That will come at the end of October, the meeting. Whether they do it or not is another matter. You have a government in Japan that's talking about stimulus measures again. It's all yen negative. You don't even know whether that Japanese government's got the votes to push it through the diet. The Noda government, to me, at least, it seems to be more in office than it is in power these days. The elections coming. You even have the pathetic situation this morning where the Japanese justice minister, elected to the position 3 weeks ago, has admitted previous ties with the Yakuza, albeit 30 years ago. How did that get passed? You know, whichever way I look at this, why would I want to be long of yen at the moment? It looks awful. And although they've got the structural surplus, we are at the bottom end of the range. Dollar yen is not far off all-time lows. You have to have a reason to be long yen when you're consistently pushing at the bottom end of the range. If you don't have a reason, you have to sell it.
And a structural current account surplus is not on its own reason to hold yen.
It's not enough.
OK, Neil, thank you very much. In Deal Zone today, the BP Rosneft saga moves closer to completion. They're expected to announce a $25 billion deal that could give BP a stake of up to 20% in the Russian firm. Details expected to be announced later today or tomorrow. BP shares up about 0.25% as markets wait for confirmation. Two stories catching on in the world of social media this morning. Business Insider is the latest to see some green shoots of economic recovery, or at least spot those who are spotting those green shoots. Morgan Stanley and Goldman's Jim O'Neill among the latest to think that the global economy has turned a corner. Among the evidence, this chart. Goldman's global leading indicator, which is showing its first pickup in momentum all year. And talking of Goldman, the verdict is in on the supposed expose by former Vice President Greg Smith, and it's not kind. Among the headlines being tweeted, a tell-all on Goldman has little worth telling, says the New York Times, and the much-tweeted Reuters story says Goldman expose falls short of the hype. That's all from us for now, but join us every day at this time, 12 noon London time, to take a look at what's moving on the market and why. I'm Jamie McGeever. This is Reuters.